What's up everybody, Tom here with another video. Today, we'll be talking about the latest news in the stock market along with our technical analysis levels of the S&P 500, Nasdaq, Volatility Index, gold and Bitcoin. The stock market has again reached another critical point. So will this level hold or will we now see a move lower in the stock market during this corrective phase? Let's take a look together throughout this video. Stay tuned. So one of the things we like to do on this channel is, of course, we like to try to take the complicated out of the stock market and break it down together to simplify it, to understand it better. One of those ways that we can do that is by understanding the S&P 500 heat map and what's happened over the last session of trade. So here we've got it, and it's clear that everything was pretty much down yesterday. Some things were up, but generally we had a movement down in most stocks. This was still led by the tech, FANG stocks, and other popular tech trading stocks. And it makes sense, they make up a huge part of the index right now. So when they move down, of course, we're going to notice it in the price. When we move over to the technicals, one of the best places to start there is the volatility index, or the VIX. Now this often gauges the fear of the market right now. And there's a few things we always want to do on our charts. One thing we always want to have is we've got a 20 here. Now we have this because traditionally, pretty much most people on Wall Street and most people that invest out there, when we are above the 20, we are still in a point of fear or crisis. When we're below the 20, we're in a normal market trading condition. And generally, when the VIX spikes above 20, we're seeing that increased volatility and a chance for flash crashes and big moves at any point in time. Now we've got this level boxed up that we did in the live session last night. And if you're interested in live sessions, please make sure to subscribe and of course hit that alert button, as we're running several all the time during the week talking about the markets during this crisis. We've got over here resistance that would act as support if it came down, and it did so last night. And we saw it go straight into this 20 moving average, or the red line here. Now, if we get through this 20 moving average and we see a close above this zone, I think that opens up a few things. Firstly, the support over here is acting as resistance right now. If we break through that zone, we could see a spike very easily up above 30, all the way into the 34s or the 36s. And this is because there's a lot of what we call blue sky above, in terms of an area where we don't have a huge amount of support or resistance on this time frame. Another thing to note is we always want to go and have a look at a top-down approach. So we want to go usually through the monthly, weekly, into daily. But in this case, I think the daily presents another interesting fact, which is the 20 is sitting behind price, sitting just behind our boxed area down here. Now, why is this important? Well, the 20 has acted as a very key point in the market during this particular crisis. We can see here when the VIX, or the fear, was dropping out of the market during the months of March into June and July, the 20 acted as dynamic resistance all the way down. So it's definitely one, and definitely a great moving average to have on your charts. Now, why is it so great? Well, even in Apple, we're seeing a very similar trend. Apple firstly was bouncing off the 20, and often did so, just like the Nasdaq and the S&P 500 that we'll be looking at throughout this video. We saw it bounce off the 20 again, big kind of bullish hammer spike up here, and then last night all the pre-opens were actually right at the 20. And that's important because we're seeing a phenomenon in the market right now where in the mornings, and we're coming in pretty aggressive in terms of we've got positive sentiment, we've got positive moves in Asia, and then we're seeing a bit of buying in the first hour. Then we're seeing weakness into flow-on effects and bigger selling in the back hours of trade. And I've always said, and I'll continue saying it, the last couple of hours, specifically the last hour, matter the most in the stock market, because this is when the big players come in and start placing their positions. So always pay more attention to what happens at the close of day than the open of day. And this is particularly important into Fridays. If we see a sell-off in the stock market in the last hour of trade on Friday, then that usually means that people are trying to hedge their bets for the weekend. Traders are getting out because they're concerned about the event risk or potential risks of the weekend, and they're not confident in their positions. So it will be a very interesting Friday for sure, considering the sell-off we saw in Apple last night. The 20, which was acting as dynamic support, acted as dynamic resistance, and we saw that sell-off. And of course, this 50 EMA down here, the blue one, if this does not hold and we see a close below here, I think it really opens up $100 for Apple where previous structure was. And we talked about that in a few vids. Another interesting chart that we always look at is copper. So copper also fell with the market in the last couple of hours of trade. And we're now testing this support resistance line of 2.95. We have previous resistance points that were broken through recently, and copper's basically in a giant double top right now. If we go down to a 4-hour time frame, I think a lot of people would agree we have pretty equal highs up here. We have obviously the intervening trough down here, and if we break through this point, we'll be getting through a 200 moving average, the green line here, and this could symbolize further selling. We'd want to see a close under here, obviously a pullback, and then lightning bolt down like we talk about a lot. And this would expose probably down to the 2.8. And whenever copper is selling off, remember it's Dr. Copper, it's one of these things that shows economic health. So it's a lead indicator. And if we do see a double top formation on copper, it could be very negative towards the markets. So a few people have been asking me, when does this stop? Is this a crash? Is this just a correction? So I still think it's just a corrective phase in the markets, and we're still very optimistic and bullish longer term. Remember, when stock markets make all-time highs, generally that leads to another 12 months where we have a 9% new high after that point. The ECB came out last night, and if you're not sure about what the monetary policy was, basically it's the same as it was. They're keeping it at the same, which is important. Unemployment claims in the US, of course, came in slightly worse, but I think all and everything leads up to the point next week. So if you don't have an economic calendar like this at forexfactory.com, I think you definitely need to get one. So this is set to my time frame here in Australia, but basically Thursday, September the 17th, for me at 4 a.m, we have the FOMC economic projection statement, fund rate, etc. And of course, the press conference itself. Why is this important? Well, I think the market wants direction from the Fed as they're not getting it from Congress right now with the bill. It's been a while, and remember, only a little while ago, everyone was very worried about the stimulus running out in terms of Congress and what they were doing. They still haven't really made an agreement. So I think a lot of the bearish action will move into Thursday, September 17th, so Wednesday in America. And this could be really the catalyst that then therefore pushes the market up. So we may only be seeing further shallow kind of movements in the market, and then we might see seeing some bullish movement if the Fed comes out and brings that printing press with it, which they have been recently. So let's take a look at the S&P 500 and take a look at the broader markets right now. Well, the S&P 500, very similar thing. We'll go into the smaller time frame first and just talk about what has been happening. So let's go down to the 1 hour. So what's been happening is that we've been seeing aggressive move in the first hour. So this was the first hour of trade we covered in the live session. And basically we saw the market go up, hit a resistance, which was previous support over here, especially on the 4 hour, it's very clear. And then of course, sell off into the back of the day. Now the futures again are pulling up. So will we see the same phenomenon? Well, we'll come in relatively hot into the market today, and then we'll sell off later on into the end of the day, into of course the weekend. That will be, time will tell, but we are testing the lows again here. Now, if we go over to a daily, you'll notice what I said on Apple before was that we had a 20 moving average touched the resistance, and that acted as, of course, resistance instead of being support that was previously. So on the S&P 500, this is very clear. We've got 1, 2 major touches. They were both supported, and of course, this made it a very good level for potentially buying the positions up. Then on top of that, we had a close through, and we actually found it last night where it's been acting as dynamic resistance. So we're actually trapped between the 20 and the 50 lines here on the S&P 500. It's a very interesting point. Now, the 3300 acted as support before, just below, of course, the 50 EMA. We expect that if the market gets through, where could it go next? It might come bounce back up, find some form of course, resistance at the 50, which it found previous support out over here, and then move down to the next structure zone. The next structure zone is clearly at 3200 with previous resistance, and previous support. So I think 3200 could make up a very key area. And if you add pivots onto your chart, you'll have a monthly S2 at around that zone as well. So there's a lot of reasons why the market could certainly pull back. And definitely watch the video we put out earlier this week to look at the fib levels on that as well. So let's take a look now at the Nasdaq. Are we seeing a similar thing? Exact same kind of setup, exact same kind of technicals. The 20 here though is even more pronounced. So many touches to the 20 through this big bullish aggressive trend of the Nasdaq. And then, of course, we saw it break through, hit the 50, find support at around that 11,000, and then open up exactly at around that just under 11.6 level, or the 20 moving average, where it acted as resistance again. So again, put this thing on your charts. It's definitely worthwhile doing. If we get through this point, where do we open up? We've talked about previous structure levels being at the 10.4, 10.5. So if we get through and close below here, we'd pretty much be looking at a 10.5 for the Nasdaq, as it likes to go down to those levels. And if we get through that zone, potentially all the way down to a 10, where it will meet a lot of buying support. Why is this? Well, if we go through the weekly, we'll notice firstly, the 20 moving average on the weekly, a point that often the market likes to come back to, is sitting at the 10.5. I think it makes a lot of sense for this level to be tested and for this to be a zone where Wall Street starts to buy positioning. Then if we get back down to the 10, the reason this is so key is it's the psychological level, previous structure in the market, and a huge psych level where a lot of people will be buying again. So I definitely think it's one to watch over the next coming week ahead of the FOMC statement. We're also seeing some interesting structure through things like Bitcoin. We won't go too much into this, but it's a big technical thing that I think is always important to note. And that is that whenever you see so many big kind of wicks coming off a key zone, you know there's a huge amount of buying pressure at this point. So we can see here, this is the 10,000 number on Bitcoin. Massive psychological, very similar to the Nasdaq if it was to hit it. Then we've got a huge amount of bullish bounces off that level, and we've got a great structure accumulation forming here. So if we do get a breakout on this particular pair, we'd be pretty much signaling into the 11.2 because that's where previous support was. And of course, we would have been doing a lot of winding and accumulating at this level. So I think it's always important to note, what are the candles showing us? And are the candles showing us a consistent story? And in this case, I think with Bitcoin, they certainly are. If we have a look at gold versus, of course, the US dollar, well, gold versus the US dollar over on the right-hand side here is still struggling after its blow-off phase. We've still got a series of course, lower highs over here, and it's starting to kind of break down every single time. We'd want to see gold buy off this zone right now if it was going to go long, and of course break past this 1965 high, which would signal another move upwards of 2000, and then if it gets through there, upwards of 2015. At this point though, gold's pretty much got a fortress under it at around 1920 to 1900 for buyers, and it is going to struggle a little bit if we continue to see what we're seeing on the left-hand side over here with the dollar index. So the dollar index bounced quite sharply last night. We have a bullish hammer now on the dollar index over here. We've got our highlighted zone between the 93.80 and 94 area, and this area remains the key point where we're going to see Wall Street really pay attention to dollar strength across the board, symbolizing a break above here where we see the market move up, come back down, and then of course try to pick it up. 95 and 96 remain very key points after that happens, but it'd be more bullish sentiment that's going on. The bullish sentiment has already started though. We're above the 20 moving average. We have not seen that for a very long time on dollar index. We've got a bullish hammer here. And of course, as we like to see, let's see if we have a quick but sharp, bullish, aggressive move today on the dollar index where it gets above this zone. That will symbolize flow through momentum, and then of course a flow-on effect to dollar strength across the board. So at this stage, the dollar's still in a holding channel, but if it breaks past that 93.80, 94, we're certainly seeing a very critical point, and that will probably be timed at the same point as we see the markets fall lower. Just a quick reminder, we've talked about this chart quite a few times, but it is more than normal that September and October are weak months in the year. Remember, November and December are historically incredibly strong months of the year in the stock market, specifically December. Now, we did have a bit of a flash on that a few years ago, but the Santa rally is one of the best seasonal events that happens in the stock market, so it's definitely one to watch. We hope everyone has a great weekend, and of course, remember to subscribe and hit the alert button for this channel if you enjoyed it. Give the video a big thumbs up, and as always, just a reminder, we're well on our way to 20,000 subs, so I just want to remind everyone in the trading community, we're giving away $500 on 20,000 subs to just one lucky subscriber. All you have to do is subscribe, and if you want to check us out in the socials as well, that'd be great. Happy trading, everybody. I hope everyone did all right this week, and we'll certainly see you over the weekend with some more analysis on the closes as of Friday. Bye for now.